Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 4th of February 2021, and we're reporting that the short silver squeeze is over. But premiums will remain high, at least for a little while. Let's take a look. Silver has fallen back further today, and its price currently, as at 12:30 GMT, stands at $26.44, down some 55 cents over the last 24 hours. We have to confess that we are expecting silver to fall even further, and may even enter the $25 territory. But we'll wait and see. It's too early to tell, but the trend is definitely down, at least for the moment. Now, we mentioned in our video, is the silver Robinhood Reddit party over? To expect prices to fall back to $26.50 and possibly even lower. And it looks as if this is what has happened. And also in yesterday's video, because the other one was the day before, which was entitled Bullion Dealers Sold Out of Silver, Premiums Rise, we pointed out that even though spot prices are falling, premiums for physical silver remain extremely high, as so many dealers have, at least for now, run short of stock. We also issued a caution not to get too carried away in buying the physical at $10+ premiums unless you seriously believe silver is going to rise to $50 anytime soon. And if you don't believe that, there may indeed be an opportunity to wait for those premiums to fall a little. But as always, you are master or mistress of your own destiny, and the decision has to be yours based on your own research, not necessarily listening to us. Now, it's our contention that as far as the Reddit Robinhood short silver squeeze is concerned, it's over. But it has resulted in an unprecedented demand for the physical and has attracted a considerable movement of funds to SLV. Now, for those new to the world of silver and markets and commodities, SLV is an exchange-traded fund that holds silver for investors, and it is bought and sold at leading brokerages, just like stock ETFs. Now, it's important to be aware, though, that what started this bull rampage in silver last week, and continuing through Monday, was a frenzy fueled by retail investors. But many of these bulls weren't just buying the precious metal, or at least that's not what drove the price up so high at the time. We would argue this is what's driven up the premiums, but not the price initially. You see, they were pouring hundreds of millions of dollars into exchange-traded funds, known as SLV. Now, if we take a quick look at BlackRock Inc.'s iShares Silver Trust, the largest exchange-traded product tracking the metal, they've experienced unprecedented inflows as traders attempted, as we know by now, to force a shortage of physical metal that would push silver prices yet higher. Other silver ETFs experienced similar moves. Now, as with GameStop Inc. and AMC Entertainment Holdings, the coordinated efforts of these buyers have led to huge market moves, not to mention a challenge for those tasked with shifting metal bars around during a lockdown. Because, of course, whenever these investments are made, they have to deposit these metals at various locations. Now, they're reacting to posts on Reddit, Wall Street's Bets forum encouraging traders to pile into silver. Although, frankly, and to be perfectly honest, it is hard to determine the exact origin of all this, because comments began appearing on the Reddit page on January 27th, saying that banks have been keeping prices artificially low and urging users to buy into SLV. Now, in a future video, we'll cover that issue because it's not quite what it seems. Now, the surge of demand sent the precious metals prices to an 8-year high and led to SLV's best day of inflows on record. Now, BlackRock's fund ensures that the physical bars that they acquire once people invest in their SLV are held by custodians with vaults in London, New York, or elsewhere on behalf of the trust. In the case of SLV, that's JP Morgan Chase Bank, NA. BlackRock charges investors 0.5% and pays fees to JP Morgan, which allocates the bars to the SLV account. In practice, this process is quite cumbersome and involves forklifts and high-security trucks moving metal around London in the middle of a lockdown. To provide leeway, some bars can be unallocated, meaning the custodian effectively promises the silver based on inventory elsewhere, but doesn't physically set it aside. And this is where the conspiracy theories and the suspicions come in. But SLV's prospectus states the custodian will take reasonable steps so that no more than 1,100 ounces is unallocated at the end of each business day. So one can keep an eye on these just to see whether they actually conform to that. Now, global ETFs, including iShares Fund, held 940 million ounces, which is the equivalent of 29,000 metric tons, of silver on February the 1st. This is according to Bloomberg. That number jumped by 3.8% that day, the biggest daily increase since 2019. SLV owned more than 620 million ounces, about 60% of all ETF silver holdings, and equivalent to almost half of the world's total silver consumption in 2019, according to data from research firm Metal Focus. Now, many of the investors piling into SLV see it as a tool they can use to repeat the short squeeze that was engineered in shares of GameStop. In that case, a concerted effort to drive up the price forced hedge funds that had bet against the stock through short sales to spend billions to cover their positions. The idea was if they buy enough silver through the ETF and buy physical silver in other forms too, such as coins and small bars, they might create a shortage of the physical material. And some might argue they've achieved that. In theory, that could trigger a scramble for less liquid resources of metal that will only come to the market at a higher price, sending ripples through the London over-the-counter market and beyond. Good theory. But we cautioned in our earlier videos. Do not necessarily believe this is what will continue to happen. We have 40 years experience of being involved in investments. So we know a little bit about it. Not as much as some, but we know something, and we're not guessing or just watching YouTube videos. Boosting a commodity or trying to manipulate its price is a very different proposition than a single stock share. You see, commodity markets are huge. You see, before the short squeeze in GameStop, its daily volume averaged around $50 million. Silver's average on the New York futures market in 2020 was closer to $11 billion. There's a vast difference between 50 million and 11 billion. The global silver market has also been oversupplied for years, in spite of what the pumpers tell you, thereby making a physical squeeze less possible or probable. And data shows that there is no hedge fund net short position in the silver futures market, meaning the Reddit theory could just be wrong. In fact, a backlash against silver was gaining momentum among posters on the Reddit board that kicked off the turmoil in the first place. So since Monday, we've seen silver prices begin to revert back to normal, with the one exception that premiums have doubled or trebled or even more so, and there is for a short time a stock shortage. Now we suspect, and really are almost certain, but you can never say 100%, that it's unlikely this will be attempted again. And one must remember that when one takes out futures, they do eventually have a maturity or expiration date, depending which way you pronounce it, at which time either delivery is taken. In some cases, all the transactions are rolled over, and we doubt these will be rolled over. So where does this leave us? Well, for a short while, expensive and difficult to get physical retail stock. Don't be too alarmed by this, because most dealers have learned to limit stocks holdings based on past purchasing, and there have been a few years of relatively low physical buying, at least in the West, although this in the last perhaps 12 months has changed. So when there is such a surge in demand in a day or two equal to that normally sold in a week or a month in some cases, then shortages are inevitable. So there is no global shortage of silver per se, just in the products being demanded at local levels. Now, in the interest of transparency and fairness, some mints too are short of product, but partially for slightly different reasons. You see, The Guardian reported the following yesterday. We'll just quote them. It's relatively short. The United States Mint was unable to meet surging demand for its gold and silver bullion coins in 2020 and through January, due partly to pandemic-driven demand and plant capacity issues, it said. Sales of US gold bullion coins rose 258% last year, while silver coin demand was up 28%. The Mint said on Tuesday. Heavy buying has continued in 2021, it said, squeezing supplies, which had already been tight as the coronavirus affected production. Note that. Affected production. A social media-driven buying spree lifted silver futures to an 8-year high on Monday, but dealers in the markets for coins were already grappling with a supply shortage and shipping delays before that rally. It came as Treasury Secretary Janet Yellen announced she would be calling a meeting of key financial regulators this week to discuss market volatility driven by retail trading in GameStop and other stocks. Yellen will convene heads of the Securities and Exchange Commission, the Federal Reserve Bank of New York, and the Commodity Futures Trading Commission, a Treasury official said on Tuesday. Shares in the struggling retail chain fell 60% on Wall Street on Tuesday to $90 as the mania sparked by small investors that had sent its value soaring past $300 a share last week looked like imploding. The Mint, a division of the US Treasury, had limited distribution of its silver coins to suppliers as it's currently changing the designs for its American Eagle gold and silver bullion coins. There was going to be a backlog in the silver bullion supply chain that rendered silver eagles more scarce either way, said Everett Millman at Gainesville Coins in Florida. He expected delays until mid-March for the most popular products. The silver coins and bars that are available have acquired significantly higher premia, he added. In January, 220,500 American Eagle gold bullion coins were sold, up 290% from 56,500 a year earlier, the Mint said. For this year, the Mint has a limited window to produce its current gold and silver coins, with redesigned coins expected to debut in the summer. It is limiting distribution of its gold, silver, and platinum coins to specific dealers because of heavy demand and a limited number of suppliers of metals, it said in a statement. The silver rally in recent days is just the latest attempt by some traders to persuade more investors to buy up physical silver coins. They believe that large banks are manipulating the price of silver and that buying up physical silver will force a shortage and push the price up. The spot price of silver futures rose 3% in early trade on Wednesday to $27.19 an ounce, almost $3 short of its high on Monday, and of course, as already mentioned, it's now below $26.50. So our conclusion really remains the same as yesterday's video. Yes, we do believe, and let's get this straight, we do believe that the future for silver is bright, and in this decade, and over the next few years. But you have to hold it for the longer term. And provided you do that, no worries. Rest assured also that product will eventually get back to the market. But for now, and for perhaps quite a few months, we're going to have what we term excessive premiums. So the issue and decision you have to make is, will the spot price of silver rise before those premiums come down? And we cannot answer that because so much does depend upon how much continuing demand there will be for silver products versus the supply issues that both coronavirus and other logistical issues and design changes, etc., will have. So that's it. We think the silver squeeze is over, certainly as far as this gambling is concerned. Prices will revert more or less the spot price to normal, but meanwhile we will all have higher prices to pay for our physical product. What do you think? Do you agree? Disagree? Share your thoughts. They're always read, may not always be answered because of time, but rest assured they're always read. Thank you so much for listening. If you haven't already done so, do subscribe to our channel. We have some quite interesting videos coming up over the next week or so, specifically addressing how come JP Morgan's holding so much silver. Let's deal with that issue from a professional point of view rather than, shall we say, a conspiracy theorist point of view. Until next time. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.